Let's talk about how I was able to turn $20,000 into $171,000 with $2,400 a month in income simply using real estate. And I'm going to show you the strategy that you can do in under a year. So let's get started. Hey, what's up everyone? Sean here. Welcome back to my channel. If you are new, welcome. If you are all about finances, investing, entrepreneurship, or simply just living life in your terms, this is a channel for you. So after this video, be sure to check out some of my other videos. I'll leave some links in the description box below to some of my most popular videos or some of the best videos I think that you will enjoy. So be sure to check those out. Now, if you have $10,000, congratulations, because did you know that with $10,000 or more, you are part of only 25% of people that have $10,000 more in their savings account. $10,000 is a super crucial point because this is when you can start making some really awesome investments to start magnifying your wealth. So I want to talk about how I was able to turn my $20,000 into over $2,400 a month in income, and how I was able to do this using real estate. Let's talk about that. Now, I talk a lot about investing on my channel, and in fact, I love all types of investments. I invest in stocks, I also invest in real estate, and many different types of asset classes. However, in my opinion, if you only have $10,000 to $20,000, I think the best place to magnify your wealth in the beginning is going to be real estate. So let me show you why. Now, let's say you've been watching some of my videos or you've been studying finances and you decide that you want to invest in the stock market. And because you want to do it very smartly or intelligently, you want to invest in an S&P 500 index fund. Now, the reason you want to do this is because you know that statistically, 94 to 96% of the time, an index fund will beat out an individual stock picker or a hedge fund manager over a 10+ year period of time. Now, let's say you take that $20,000 and you get the historic average of an S&P 500 fund, which is 10%. That would leave you with $22,000. That's not bad. $20,000 to $22,000, you didn't do a whole lot. But let's say you say, you know what, no, I'm not going to do an index fund. I am going to beat the market this time, and I know some great stocks, and it's going to go great. So instead of doing an index fund, let's say you invest in an individual fund. So let's say you do like Apple or Tesla or some EV stock or some hot new IPO. All right, and so let's say you get that $20,000, and let's say that you end up getting 100% return. So you double your money. So now you're looking at $40,000. That's phenomenal. I will take 100% return anytime. Let's say even more than that. Let's say that you hit the jackpot, and let's say that you 3x your money. Okay, so $20,000, you get a 200% return, which is 3 times. You're going to land with $60,000. And in fact, if this past year, if you've gotten a 100% return or a 200% return on a stock, leave it in the comments below. I want to hear which stocks you've been going into. But look, you can absolutely hit these numbers. It is possible. But the thing is, it's not guaranteed. You have no idea if you're going to hit it or not. And even if you do, it's hard to replicate on a consistent basis. Now, if you're trying to get something that's more consistent or reasonable, it is going to be closer to 10%. Let me explain to you why real estate is actually going to be an even better way of going. So one of the things that I love about real estate is your ability to leverage money. So let's talk about this. Because this is something that honestly, you can't really do in stocks. You can, it's called margin trading, but the thing is with margin trading, it's very, very risky. And the fact is, if you margin trade and your stock goes down to a certain level, even if it's just temporary, your brokerage account may call you up and demand that you sell some of your stock to pay back some of that margin. This is not going to happen in real estate. But the cool thing about real estate is leverage, and this is where true wealth building can really happen. So let's say you have your $20,000. And let's say you decide to use an FHA loan, which is a first-time home buyer type of loan, and you decide to put down 5%. So typically with FHA loans, you can put 3.5% to 5% down. So we're going to say 5% down payment on the property. This would give you a $400,000 property. So literally for $20,000, you can take control of a $400,000 asset. So let's take this $400,000 asset, and let's say this next year it appreciates by 5%. So the historic average of real estate is usually between 4 to 6%. But let's just say 5%. This would literally yield you a $20,000 profit off this next year, plus you have your initial 20, giving you $40,000. So that would be like doubling your money. Now you're thinking, wait, Sean, that's no different than just hitting 100%. Well, I'm going to share with you how I was able to turn $20,000 into $171,000 and $2,400 a month income. So let's talk about how we can take this even a step further to begin really magnifying wealth at a quick rate. Now, when it comes to making money in real estate, like anything else, the better you get at it, the more money you're going to make. And with real estate, you make your money on the purchase by finding good valued properties. Now, just a few years ago, I wanted to find a property. So what I did is I looked for an REO property, which stands for real estate owned. And this is when a bank forecloses on a property and they take it back. And they usually will auction it off. So I found a 2-bedroom, 1-bath house on auction for $17,500. Now, I knew this market very well. And I knew that this house, if it was on the regular market, it's listed on the MLS, that this house would have sold for probably $45,000 to $50,000. So I knew this was going to be a good deal from the start. I looked at the house, I knew it had good foundation, I knew the roof was fine, the structure of it was really good. It just needed some minor cosmetic fix-up, and it had just been foreclosed on, which is why it was being sold for so cheap. And I closed for $19,000. So this is what I got the property for, was $19,000. Now here's what was interesting. Instead of utilizing and tying up my own money into the $19,000, because this was so cheap, I decided to get a personal loan. I got a personal loan for $25,000 at 5.49% interest over 5 years. So this is great because I was able to buy this property literally using a loan, so none of my own money, and I was left with a difference of $6,000. Now, I easily could have just taken this property, just resold it, and probably could have gotten, at least $35,000, $40,000 or more on it. Or I could have went ahead and just rented this property out and started collecting rental income right away. But I decided to take this a step further to maximize profit potential. So what I do is I took my remaining $6,000 and I added 1 bedroom, 1 bathroom, and some cosmetic fix-ups. So, I put in a little new flooring in a few places, I painted the walls, I cleaned it up a little bit, made it look more presentable. Now that required me to put about $15,000 of my own money into it. Of course, I also had the $6,000 on top of it, but that completed all my renovations for everything. And this, honestly, this figure is probably a little bit high, but I want to go ahead and just make it a little bit higher just to show you the safe side. So $15,000. Now here's what was awesome about this. After adding the bedroom and the bathroom into the house, putting $15,000 of my own money in, I had the additional $6,000 go along with it. This $19,000 home now was appraising for $75,000. Now, what I love about real estate is that you can make profits and not pay taxes on it by utilizing refinancing or things like HELOCs or line of credits and stuff like that by taking on additional debt. So instead of selling this house at $75,000 and paying taxes on the appreciation of the house, what I did is I went to the bank and I said, hey, look, I want to get a new loan on this property. So they went and appraised it, and it appraised for $75,000. They gave me 70% loan to value, and some banks will actually give you 75%, just depends where you go, which gave me $52,500 in my pocket. So listen to this already. Look, I literally bought a house using a personal loan for $19,000. I put some money into it. I put about $15,000 of my own money into it. But that right there already converted into a tax-free $52,500 back into my pocket due to a refinance structure. But I didn't stop there. So now that I had my $52,500, I wanted to put that money to use. So what I did is I went back on the market and I tried to find another property. Now this time I actually found a 3-unit apartment complex, and it had 1 2-bed, 1 bath, and it had 2 1-bed, 1 bath. Now, this unit was selling for close to $60,000. I was able to negotiate down to $55,000 after closing costs. So this means that I had to put an additional $2,500 to purchase this property. Now, I put an additional about $2,500 into some renovations. So if you remember, I had $15,000 from the other property, $2,500 additional to put down on the place, and then another $2,500 for renovations, putting about $20,000 in. Now, if you remember with this $20,000, I didn't actually put $20,000. I had gotten all that money back. So really, at that point, I actually had a profit from the previous property. So really, in essence, I was only putting down like $5,000 essentially. But let's just keep numbers simple. Let's just keep it at 20 because that's $15,000 first property and the other. But this $55,000 property was appraised at $96,000. Now I did the exact same thing. I went back to the bank and said, hey, look, I want to refinance this property. So they gave me a 70% loan to value again, which comes out to $67,200. So once again, I was putting very little money down and basically getting back even more profit tax-free. Now at this point, think about it. I had this $75,000 house, plus I had the $96,000 house, yielding me $171,000, which is approximately $120,000 back in my pocket, but having control of an asset of $171,000 with very little money down. Now, so this in and of itself is absolutely phenomenal. That's multiple times on my money. But once again, what I love about real estate is not only did I get all this money tax-free, I also got rental income from this. Let's break this down. So remember, at the very beginning of this, I started with a $15,000 renovation. And in addition, on the second property, I added about $5,000, about 20 grand. But in this process, I was able to get $171,000 of property, plus I was able to get back about $120,000 cash back, tax-free. And this gave me two properties, a single family home and a 3-unit. My single family home, I was able to rent for $800 a month. My multiple unit, remember I had two 1-bedroom units, both of those I rented for $475, and then I had a 2-bedroom unit that I rented for $595. When you add all those up, so 800 plus 475 plus 475 plus 595, that brings you $23,045 per month. So something as simple as a $15,000 to $20,000 investment. But I also had $120,000 cash put back into my pocket, tax-free, and I was able to generate almost $2,400 a month in income. And this is why I love real estate, because of leverage. Being able to find really good deals, add value, leverage your money, and begin stacking it into cash flowing producing assets. Because this pays me every single month. And I can now take this money and move on to the next deal. And this is what's so fantastic. If this video gave you value, please be sure to like this video, hit the subscribe button, hit the little notification bell if you want more videos like this. Also, leave some comments below to your favorite investments. Maybe you've been killing it in the stock market. Leave which stocks you've been doing. Also, if you are a real estate investor, be sure to leave your comments below as well. Or if you're wanting to get started in real estate, leave some comments, leave some questions below. But I hope this gave you value. Let's get out there and let's build that dream.